This is the Note Closer Show, where you get the latest developments in distressed note investing and learn the secrets of how you can control millions of dollars worth of property for pennies on the dollar. Get educated and entertained by someone who has closed thousands of deals and lives to support you in achieving the same. Now, here's your host, CEO of We Close Notes, Scott Carson.
Good morning, good afternoon, good evening, everybody. Welcome to this episode of the Note Close Show. As always, Scott Carson, excited to be here with you today. I'm even more excited to have a fellow Austinite on the podcast. Many of you guys know we have such a big network of people across the country. Austin is such a different market, though, but I'm really honored to have the self-proclaimed Rocket Man join us here from down in, I say kind of mid-Austin, down by off of Camp Mabry and 45 and that neck of the woods. But this guy, I'm really honored to have him on the podcast. He's doing an amazing job. He's an active real estate investor and fundraiser, leveraging checkbook-controlled self-directed IRA accounts and solo 401ks to create a diversified real estate portfolio yielding double-digit returns for himself. He specializes in self-storage investments, multifamily and hard money residential property loans. He has personally raised millions of dollars from family offices and individuals and empowered his partners to raise seven figures on multiple occasions. So we're talking about our good buddy and Longhorn extraordinaire, Mr. Dan Kryzanowski. Join us today, everybody. How's it going, man?
Fabulous, Scott. Thanks for having me. And yeah, it is a true honor to have two Austinites here. I saw your slate of the first 500 plus, and I was just, I was a fanboy for everybody. So I'm honored to be on the list. I'll tell you that much.
Well, thanks, man. I appreciate. We're honored to have you, and it's a great thing. Austin's such a different market for a variety of different reasons. But why don't we dive in? Why don't you share a little bit about your background? And we're going to dive in, for those that are listening, we're diving a little bit some of the do's and don'ts with checkbook IRAs and some of the other things as well too. So, but Dan, tell us a little bit how you got started as an investor and kind of your backstory.
Sure. And I've shared this in some of our common groups here in Austin. Is I was born in 78. So my first 30 years in life were very, I think, linear, probably like a lot of folks here. You went to school, you went to college. I grew up in Northeast Pennsylvania. So to be very apolitical, but for both sides of the aisle, I played on Biden's Little League field, and then I rode with Trump Jr. at UPenn. So no more politics, but I just had a great experience. I think right place, right time, Merrill Lynch, GE, big companies. So coming from Little Scranton, PA, my dad was a principal, high school principal, my mom was a social worker, but did have a good fair amount of family that were, probably the first generation that were entrepreneurs. Some had some land, some real estate. So things kind of, seeped into my brain a little bit. And then I had the benefit with GE Capital, I have a taste of Austin. So if you can imagine actually living on the east side next to Franklin's Barbecue and them giving you a flat screen TV just to move in for a 6-month lease, that was my first experience in Austin back in 07. So
nice.
With that as a backdrop, I rarely go against my gut, but was going to work for Republic Tequila. The bottle's in the shape of the state of Texas. Ken McKenzie married a gal from Guadalajara. It was the first true organic product, and then I didn't. So it took us about 3 more years to get back here in 2011. And right around this time of year, the Kite Festival, I came down, got a job offer, one-way ticket. And GE said, thanks, good luck in life, and probably a pretty good move in hindsight. And we've been making our way, since.
Awesome stuff. Yeah, it's Franklin's Barbecue, the best barbecue in the world, not just in Texas.
History of the world, yes.
Well known on the Food Channel and all that good stuff there. He does a great job over there. Sells out often before you, quite often. But anyway,
yes.
Getting back to that, so what dove into kind of making that change into the real estate side of things, going from that? I mean, obviously corporate one thing, and then what was kind of your real estate background?
So, 2 things. I mean, at GE, I was with GE Real Estate. So your typical CRE stuff, one money claim to fame, our Mexico portfolio did not lose money in 08, 09. So I was in the marketing side there. And, coming down here, I was actually co-best men in a wedding. And the gentleman said, hey, I flip houses. And I was like, that's interesting. What's that? And he said 15%. And that's all I heard. That's all I needed to hear. And then he said, did you know you can use your retirement dollars? And this was like the magic rainbow going off in front of me. So this, I think, was the start of what, at least just giving hard money loans on the residential side in the early 2010s. And then I think the second side of this is I had the benefits through the Capital Factory network to work for Sparefoot. So I think right place, right time coming in, you know, a guy with a little bit of gray hair, and was able to, you know, double revenue, I feel put a fair contribution into the ultimate acquisition. And I got to realize there's, I mean, tremendous players, personalities in storage, and ultimately who I felt were some of the top operators and marketers. They have since gone on their own. So kind of as I evangelize my story and what I've been doing, it's been pretty easy, at least in my opinion, based on my backstory, to share how you can go from, you know, maybe just owning your primary residence or secondary, or having a REIT maybe in your, call it Fidelity 401k, to actually being very active. So either personally earning the depreciation benefits, et cetera, or more so my sandbox is really, really leveraging your retirement dollars, taking advantage of them to have a tangible asset in your community that pays a dividend, double-digit returns with somebody you know and trust that you can see, feel, and touch every day. So I think that's a warm fuzzy in my hypothesis, where I think the mindset of the average American is going to go with their dollars in 2020 and beyond.
Yeah. So let's take a little step back there. You mentioned a couple of things that maybe many of my listeners may not know. Can you explain what the Capital Factory is there? Because you dropped that. People are like, huh? What's that mean? You're just print and press?
Sure. So for those of us who'll be here in South by Southwest, trust me, you'll want to get in and have a VIP badge. But it's the Glass Hotel downtown. It's basically it's the center point for everything Austin. And there's some, you know, it's a great backstory. Josh Baer, of course, runs it now, but the original founders and some of the companies that have come out are WP Engine. Sparefoot, of course, was a great success. And what it is, it's an incubator. I know folks talk about WeWork and a lot of these other thematic incubators, but this was, I'd say, the first one, once again, going back, you know, pre-iPhone almost, downtown Austin, where everybody comes to. And I just say there's a tremendous amount of also servant leadership with the amount of events. And I think the big thing when people look back in Austin in 50 years, the win is going to be, there's many from the DIUX, many military, we'll call it military startups or groups within the broad military. There's 5 different offices within a few block radius, and the 8th floor where Capital Factory is. And there's, you know, my 3-year-old loves all the robots, but there's some amazing technology ideas, and what these guys and gals do on a shoestring budget is amazing. So all of this is kind of together, collective, all the diversity events, you name it. And, you know, Capital Factory, I think, is sharing their magic in Dallas, Houston, the Texas Triangle. So yeah, for those of you during South by, it's almost guaranteed you at least, whether it's a startup crawl or a private meeting with, you know, some very notable folks, you'll be in Capital Factory. And finally, if you have an idea, even something, you know, I know folks are maybe doing one step above flipping, adding some sizzle to their real estate or real estate tech, you can also hop in for a few $100 a month to grab a desk there.
Yeah, it's basically a great place to go and really brainstorm and be a nice think tank.
Yeah.
And co-mingle, rub elbows, Vulcan mind melds with some great people.
Yeah.
You know what I mean? That's a beautiful thing. Is networking at its ultimate for the most part for those that don't know about it. So yeah, thanks for explaining that for our listeners out there for you. Now, so you had somebody tell you you can get a house flipping at 15%, and you started feeling that sizzle. You know, excited about things. You know,
even now I'm getting all jazzed up. Yeah.
So let's talk about how that evolved from that to where you guys are at today. So.
Yeah, so I mean, this is just me personally. I mean, also on the side, I felt I was doing the equivalent of crowdfunding before the Jobs Act was even passed. You know, even from the first bar on Rainey Street, a few other things on the east side. I've had tremendous success with female entrepreneurs, which, you know, the numbers don't lie. Plus, I feel it's very impactful how this money replicates in their sub communities. But on the, you know, real estate time, as things have gone along, it was funny. I was on a plane to Money 2020, which is the large fintech show in the world. Saw Henry Yoshida. This was after his success with Goldman Sachs buying Honest Dollar. And, you know, me always, you know, being the salesman, I guess, to be blunt, said, hey, Henry, might want to look at this storage deal. And then I shot on a PDF follow-up that probably said, if you do fill out this form and this form and this form and find a fax machine and a scanner, then you can use your retirement dollars, really not knowing Henry's deep background and that he's 100 times smarter than me on the retirement side. So in short, I think this is one of the founding stories, and there's a few other that puts it together for Rocket Dollar. What we're really doing is democratizing, I would say, the ease, the education, the empowerment that folks are made aware they can use their retirement dollars to invest in notes in private real estate. And then secondly, the other thing that we realized early on, it really, I mean, these have been around 50 years. It's not country club cool, as they say. So, even here in Austin, whether you're wearing the suit or the jeans and boots, you don't want to tell somebody, hey, I gave somebody a 25K note, but I was on the phone for 2 hours, and I do this every quarter. And it was great when I was using my piggy bank checking account, but now with this retirement, we're stuck on the phone all this time. It wasn't great. So, our thought was that being that, I even say well over 90% of folks making six figures are completely unaware this world exists. We wanted to make it quick and easy, almost like if you sign up for like a Wealthfront Betterment, mint.com, just super easy and to get up and going with very, very simple pricing.
And what do you mean by Rocket Dollar? What is Rocket Dollar out there?
Yeah, so Rocket Dollar is basically, so fintech company in Austin, been around 2 years, voted by Money 2020, one of the top 2 fintech startups in the world. Shaquille O'Neal actually swatted us to second, which is kind of a fun experience. But yeah, so what Rocket Dollar is, basically, we empower individuals. So there's 2 sides to the coin. Individuals, anybody listening here can tap into your old retirement dollars, or if you're self-employed, contribute up to $56,000 a year to having checkbook control, so full access to your retirement money at all times to invest in what you want, when you want. So there are a few minor exceptions, such as primarily yourself or your linear family, so not your startup, not your kid's company. You can't live in the primary residence, but everything else is in play. You want to invest in a crypto fund, you want to do a self-storage facility, you want to do notes. All of that is there. So that's what Rocket Dollar is empowering you to do. There is some stuff in the background that we take care of, but I said it's, even though we call it Rocket Dollar, it's not rocket science. And we also want the experience to be quick, smooth, easy, and no fine print in the pricing. I mean, it's $15 a month flat. There's no AUM, there's no per transaction. God forbid you make a good investment, we're not going to charge you more. It just doesn't make sense. So, at our standpoint, I think from the kind of the mission spirit is, even if you're 25 years old, starting career, you're middle age, you just went through a divorce, you got to get back on your feet, in very good faith, at $15 a month, and if you have a few grand that you can either roll over or put in this account, in many ways you can be dangerous, whether it's from a note, crowdfunding, a big property. So we're empowering all of this ecosystem that, in some we call 21st century diversification.
So you're basically, basically helping people put self-directed IRA accounts together, self-directed checkbook accounts. Correct? Yeah,
correct. And I would even order, and it took me a little time to think through this, but we even say that Rocket Dollar offers checkbook control, self-directed accounts, whereas the other players that have been around 50 years, it's a custodian that offers a self-directed IRA. And if I could, just to share a little bit in the difference. So historically, you would be able to open an account, but you would not have access to your money. It's almost like checking in with mom and dad. You'd have to fill out paperwork. The person, let's say you were investing with or lending to, would also share their paperwork, and there'd have to be a lot of check marks, and there was no value add to the deal. There was no help with the due diligence. It was, in our opinion, filling out the sake of third-party paperwork. The best analogy I can give is a health savings account where, if we need surgery, we can go get surgery, or we fall and break our arm. We want to go get manicure, pedicures, whoops, kind of below board. Same deal. The laws are very clear what you cannot do in these accounts. So, based off of that, and Rocket Dollar's proved this out. I mean, the first 9 figures of assets, first 1,000 customers, nobody has played in the gray area because we've made it very clear to say, we're going to give you a checkbook control, self-directed account. By checkbook control, you have full access to your money at all times. For most people, that's all they really need to know. It's not even, is it an IRA? Is it a solo 401k? And I'll talk about those differences in a minute, but they say, I need my money. I'm going to roll it over and I'm going to, for the next 4 quarters, do 4 25K checks. That's great. I hope this takes 5 minutes of my time every time I do it. And that's what we empower to do versus maybe spending 5 to 10 hours when they're just writing, giving a loan to their best friend.
So, okay. That's good to know. So, and is there not fees on the front end to set up the IRA accounts or the LLCs or stuff like that?
Sure. So I'll get into, so there is an upfront fee. So with our core product, it's one-time upfront of $360, which basically is just the wash. So I'll get into some of the products, trying to do an apples to apples if folks are familiar with this space, with the custodians out there. As I said, what Rocket Dollar does not do, there's no asset under management sort of fee. There's no per transaction fee. It's like Netflix. You want to go, you want to watch all Game of Thrones, that's great. You want to go document comedy, great. You just want to watch one little program. I think I'll watch Parasite this month. That's it. Game, set, match. But it's only $15, which is great. And it also doesn't eat into your balance. So let's say, you have 10,000 in a Roth, that's the minimum. You're not going to wake up like, oh, I'm 999 and you can't get in the deal. So, with that, yeah, there is an upfront. That said, from there, the checkbook portion, there's a very few. So the solo 401k, if I could share a bit, is for anybody with self-employed income. So what this means, generally speaking, if you have 1099 income, or you and your spouse have a business without W-2 employees. So the 1.3 million realtors in the world, any of, especially here in Austin, a lot of consultants, a lot of folks that retired, to the extent you're doing a fair amount of gig economy, that would qualify. All this qualifies you. Now you can just maybe qualify and then roll money in, or you can actually, much like your W-2 friends, contribute the 19,000 and then 20% of your net earnings. By this equation up to 56,000. So let's just use a round example. Mary, she's a consultant, one woman shop, makes 100K. The first 39,000 she can actually contribute into the solo 401k. That's extremely powerful. And then have checkbook control, maybe 25K for a note, and then she's going to do a personal loan for a few female entrepreneurs and then a few crowdfunding campaigns. And she'd be doing that just like she could from her piggy bank checking account, but keeping all the tax benefits. And a final point, without going too much into detail, in the solo 401k umbrella under the single price, you can have a pre-tax checking account and a post-tax. So going back to Mary's little example, let's say she's also a mentor at Capital Factory with me, and she has the opportunity to put 5,000 in this startup that's going to be the next Facebook. Kind of the seed versus tree analogy. She would probably want to pay taxes on the 5, not, let's say it goes 20x in the future, the 100. So that's something that you can also do within this account. So very powerful. And I share this in a bit of detail. Thanks for listening, folks, because a lot of the legacy players in the space will not offer this solo 401k, will not offer the checkbook control. And as more and more of us have at least a side gig, just realize this is available. So that's a solo 401k, and that's really the product we came out and got the notoriety, and that's where all the VCs out west, and even Shaquille O'Neal said, we'll let you on stage as one of the top 2 in the world. So that was cool. And then on the flip side, the self-directed IRA, we do the IRA LLC model. So what this means is that you're basically funding an LLC on day one. We have different custodian partners in the background that checks the box to say this is a good asset, and then you have this checkbook control. So it's very similar, and frankly, I think that's where the world is moving to. People want to know what they're investing in when they're getting charged. So this is what Rocket Dollar does for the individual. The pricing very simple: one-time upfront $360, $15 a month flat. In addition, where it's been beneficial as raising money. So I'm sure you're well aware of this. For folks that are raising money, I'll preface with, you're not getting charged anything, or it's not going to pull you away from your time and resources. But what we provide is very simple copy-paste marketing that you in turn can share with your audience. So Scott, let's say you're buying a house, in Cedar Park, you're going to raise some money for it. You can say, hey friends, you know me, you love me, we're already been in touch. Did you know you can also use your retirement dollars to invest? And what you're going to see, lo and behold, is, say we have 100 people. First, most are going to open the email because they're engaged with you. Half are going to say, this is great, and I get to learn in private, because some folks don't, some folks are a little introverted or don't want to be called out potentially. But it's also a cool learning. So that's why in our FAQ and HubSpot, Salesforce's competitor, I should say, for those that don't know HubSpot, we were voted one of the top FAQs in the world. You can self-educate here. So all of this comes in. So you as the deal sponsor are not basically spewing what I've been for the last 10 minutes. We have this all on our website, and ultimately within as soon as 2 weeks, you're going to get more money from less people faster from their retirement accounts to potentially close your rates.
So you're actually sending that email out to your database if you're with a client?
So it's this is with folks that are raising money. So you can imagine going to, anywhere from a real estate luncheon meetup to some of these shows. Sure, there's going to be investors. On the flip side, there's many people that are raising money, and it's not the easiest thing, just even for folks pretty tenured out there to raise money. So this is an added boost. I know one of our earliest partners, John Manus from Pinnacle, has been doing this. Tommy Prate with Magnify Capital here in town has been doing this for years. And lo and behold, about 20% of all their dollars that come in are coming from retirement dollars because they have educated. It's as simple as a 2-sentence paragraph on, say, their monthly newsletter or deal packet. And it's just awareness. And to show how big the opportunity is, your quote unquote old 401k. So let's assume we all worked in Dell. We're all here in Austin. In the aggregate across the country, that totals 10 trillion with a T. And then behind that, there's another 20 trillion of, say, your current company's 401k. So let's just stick with the 10 trillion for now. Oh, and by the way, let's not count all the Uber drivers and everybody, the self-employed folks we talked about. That's probably 40 or 50 by some DCF calculation. So with that, of the 10 trillion, only 100 billion, only 1% are actually used in these self-directed accounts at this. So it's a huge opportunity. And I think as most folks get aware, particularly in something such as real estate, it's a relatively easy conversation and it's a relatively simple transaction to set up the account and make the investment.
Yeah. Okay. I'm still not following you on one thing there.
Please.
So like you said that you've got some templates that you provide people to talk about that they can set up their deal in the templates. And then are you guys actually sending this out to your guys' client list, or is this for us to send out to our own clients, our own contacts?
Gotcha. Great question. No. So what we are, Rocket Dollar is not a broker dealer. So what we're not going to do, we cannot say, Scott has a deal in Cedar Park that pays, 8.5%. We do have a partner page though. So we do list, because some folks say, I get the call, I'll pick on the doctor lawyers, the smartest folks out there say, oh, I learned of this thing. I don't want to pay taxes. I have no clue what to do now. So we say, go to our partner page and you'll see, here's some self-storage, here's some crypto, here's a venture fund. We'll give you a flavor and we mix up, but basically what it would do would link back to some folks that we've engaged with or potentially, realize we also do podcasts, webinars, like something like Acre Trader. If you want to own part of a parcel of an almond farm in California, you can go through Acre Trader. And I think it's a really cool thing that's fun to talk about. So, we've done, we've been on different podcast webinars together, but ultimately in this little example, Acre Trader will go back to their clients. We will never say, Acre Trader returns are better than the others. Just, they happen to be one of 50 folks on our partner page and then go from there. Great question. Okay. Appreciate it.
So that's a great though, that you're showing, hey, here's some opportunities. You still have to do your own due diligence on them, but these are some people that we've worked with or other things like that out there.
And the real reason, think of, probably the most known example, I'll probably talk more from my folks back home, but the Yale University endowment. There was a lot of papers that came out, I think, in the early part of the past decade. It's not just stocks bonds or stocks bonds mutual funds, there's 3 shades of gray. They're, of course, in private real estate. They're international. They might be in some Bitcoin. There's many things that they're in. So I like to say we're really prettying up the pie when you think of a pie chart in terms of overall what true 21st century diversification. And it's not that much of a long shot because, a lot of folks here, and I think especially Texans, tend to have a second property, tend to do some things on the side. So with your piggy bank checking account, you do have this 21st century diversification. And it's amazing how folks, for one reason or another, think, oh, this retirement, it's so far away, or I can't touch it. What we're doing is empowering you to have that same sort of portfolio now with your retirement dollars.
Okay, that makes a lot of sense. Now, for you, are you guys looking? Sorry,
all good.
Looking for people that are looking to start their new IRA, set up their new accounts, and start putting into it? Or are you looking more for people that already have accounts, maybe they're looking to roll over, have a little more access to their funds and flexibility with what they're doing?
Sure. So I'll say the big yes with the hook 'em horns. So it's actually both. You're right. So a lot of, let's talk, maybe there is no like typical account holder, but a fair scenario would be, somebody married, 2 kids, early 40s, probably on their, call it a VP of some company on their 3rd corporate job, has $500,000 sitting at the likes of a Fidelity, their buddies, doing some real estate. Let's just say self-storage is what I know best. And they can put 50,000 into a deal or 100,000, dip their toe in the water. So for them, they have an existing retirement account with an existing custodian. Maybe they move 100 on day one, and then call it a year or two down the road, they consider, am I going to move more of this money to private deals? How do I want to diversify? Or say the deal they invested in sells with dividends, then they can choose what they want to invest in. So that's one. The second thing, as I said, is for the self-employed person. Or maybe you're going through a life situation, post-divorce, etc. Whatever you want to say, your balance of your kind of existing is probably lower than you want it to be. Here's where you can also contribute. So as I said, just like you would at, I always pick on Fidelity because I have them, but your 6,000 or so a year into your IRA, you can do that into your self-directed IRA. And then as we talked before in the solo 401k, especially say if you're over 50 and married, I think you're looking at 62,000 times 2, 124, on just say a gross of, say roughly, 250, 300, or say, even if it's more of a side gig, you and your spouse, here's that, if you're over 50, here's 50,000 right off the bat that you're putting away. It's so we see both. And what we're seeing, some of the fun stories, and we've had folks as young as 18. I talked to we have somebody in their 90s. One gentleman, a great friend now of the company, he's a retired pilot. And so he's seen the world and said, wouldn't it be cool? I'm going to buy a condo, but then with my retirement, I want 4 other condos in the Caymans or somewhere. And hey, what a better use of your retirement than that. So all good.
There you go. Good stuff. Good stuff. I love it.
Yeah.
Now, you've hinted about being a big fan and knowledgeable on the self-storage side. So let's get into some of those things
Awesome.
there for you.
Yes.
Are you crowdfunding into some different deals, or are you buying some stuff for your own portfolio? How's that kind of working for you, Dan?
Yeah, so I buy a few things. So I just love, as much as you can tell, I love the retirement community. I just think storage is such a great asset. So let's, I'll try to go real, just for my little brain here, real elementary to say, we can't officially call anything recession proof, because I think one of the REITs went down half a point when the rest of them are down 30, 40% in 08, 09. But it's pretty recession resistant. So let's, think why. Well, divorce, grandma dies, the kids are out of town, they got to figure out what to do. This minimalist, which I think is great, as you can see, not much on the walls here, but stuff is in storage. This was all Christmas trees, Hanukkah trees, everything before me. So it's for cleanliness, and finally nonprofit and other endeavors, whether it's for legal reasons or just peace of mind, you have it elsewhere. So, the demand kind of never goes away, and especially like Texas with the influx of population, it's here. So with that as the backdrop, it's, it comes down to operations. So I spent a lot of time at Sparefoot and thereafter talking to, I felt, were the top COOs, top CMOs in the space to really get a feel of, how do you get more people in the door faster? What is your asset mix? What is economic occupancy? So, with all that, for me, it was an easy, not just for me, my widowed mother, my son, right when he came out of the womb, my wife, we've invested in storage, and it's great seeing those dividend checks come in, all the time. So that's one. So secondly, as I share my story, it's very easy, I think, for an initial asset, because it's many ways like multifamily, it's multi-tenant, but there's not even people, which is something great. And, super worst case, as I tell folks, if it doesn't sell, you're probably still going to coupon forever, or you really have a true brick and mortar property that can be refurbed. And these are kind of ultimate worst case, under bad mismanaged scenarios that we don't see. So that's the high level of the market. And then from here, I think when folks get a taste, let's say, maybe you put in 50, 100 in a deal, you're getting your 8% dividend. You're like, this is really great. It looks like the valuation's going up. It's a lot of folks, gentlemen and ladies are pretty quiet with their money. They might come around and then put $500,000 or $1 million. I'm sure you see this with your notes all the time. You provide good service, good returns. So I think we're seeing more of that, where it's, it's not as much the money, it's still finding the right deals. Because Time Magazine is still saying, if they were to put storage on the cover, oh, too much supply. Sure, maybe across the country, but this is a very hyper submarket thing. And it all depends what your flavor is. I mean, you want to be in Fifth Street or downtown Austin and buy into Public Storage, a publicly traded REIT. They have great economies of scale. It's probably a good public stock to go into. folks that want to be in places like Bernie, Nacogdoches, these secondary, tertiary markets. Likewise, with the right operations, these can also be very lucrative. So, for those on the call that do the real estate meetups, and I've heard the, Brad Sumrocks and them of the world talk about, what's the potential that you would pay to get a higher return? This is kind of the scenario I think you see in storage.
Right. So you're investing into funds or in operators on self-storage. Is that correct?
So this is actually really, I think, topical and timely and great question. So I go into individual properties. Now I would go into smaller funds, but what we're seeing is, so as I view funds, it's kind of two things. I feel that it's either these open-ended, think of a Vanguard fund, more publicly traded, where it's open-ended, or somebody's raising 100 million for, a specific project. I feel the days when somebody says, I'm going to do a 10 to $40 million fund and fill it up over 3 years, investors, even from like high net worth and family office, they're not as warm and fuzzy. They want to say, well, no, what are you really investing in? So generally what we see is either it's deal by deal, or somebody might say, here's my history and I'm going to raise 5 million for 3 properties worth of equity. Or maybe 10 million. So I don't know if I don't want to be as levered as much. And that's basically what we see at this point. It's a deal by deal transaction, not as much into fund. Now that said, in between, I think with everything, the key to trust and respect is the education. So, whether it's your shows, podcasts, so many ways to be educated these days, but what sort of property? So as an investor, personally, I like where there's existing revenue coming in, something fully baked, but then also knowing that out back, there might be literally a plot of land that we can build, I call them squares, build some more squares, or maybe throw some boats on and pull some revenue. So other folks say, I love the ground up build. I love that potential of the 40 IRR. I don't mind if my money sits. You just got to get to know, I think, the operators and the timeline going into it. And, pulling it full circle, especially even if you're 50 years old with the retirement account, both called the instant dividend and the long-term development play, you really can't touch the money without penalty till you're 59 plus. So you might as well.
That makes a lot of sense there. Definitely. And I've got a buddy, Jim Ross, who actually puts on a online self-storage summit. Actually, I was speaking to him this morning.
Awesome.
Forth and spent some time with him in New Orleans recently at a virtual summit conference. So it's a small world, man. It gets smaller every day.
Yeah. And Jim's a great steward of education. So, I wholeheartedly double down. I mean, just for education, if folks want to listen to Jim, I think for storage, you're gonna really, he brings on the best. So that's great.
Yeah, definitely. And that's the beauty. There's so many different options out there. And here in Texas, I think we're kind of blessed as being one of the largest states with one of the biggest footprints for self-storage facilities of good ones. Or if you're looking to operate one, take one down yourself, there's a lot of opportunity out there. One of the largest networks of members as well in the self-storage community out there. We marketed that and do a drip marketing campaign out on a monthly basis to them. To generate leads. And I agree with you. I think it's no matter if it's an up market or down market, self-storage is a solid play because people are always looking to put their stuff away. Once you put it in there, you usually have them hooked for 12, 24, or 36 months relatively easily.
I'll give you there's a gentleman, I won't share names, but we're all guilty. And he was in Arizona in the early 80s, ultimately married, fantastic guy, no kids, but had dirt bikes. And, 40 years later, guess what? Same storage facility in Arizona. He knows he probably paid $100 for them back in the day and how much he's paying for storage, but it's just, there's my dirt bikes just in case. So.
Yeah, exactly. In case I decide to go out there and do it. I was just doing some purging here the last couple of weeks.
Yeah.
Offices and moving stuff. And you said it yourself, Christmas stuff in and out.
Yes.
And that's the thing too, is people, as we look at what's happened over the last 10 years and still, especially real estate, a lot of times people are buying less houses. Yes. Because the price is going up. I mean, here in Austin, we see that a lot. Lack of inventory. Apartments aren't made with the same type of storage, and we have such such a very low vacancy factor, less than 1% here in Austin, that when people have downsized or moved, they don't have a place to really put their stuff, and so that's why self-storage has done really good stuff. And I think you hit the nail right on the head. Secondary, tertiary markets around those larger markets are a great play too, because there's a lot of opportunity. Either to own or operate, or even maybe take over something that's maybe not being managed properly. All Are you seeing some of that in some of the projects you're looked at where people have the opportunity for the value adds taking over stuff that maybe, the owner operators got into it in a retirement and then decided they didn't want another job that they just created for themselves?
Yeah, absolutely. And I'm going to playfully, because the first cloud came in Austin, open it up and then look at my value add outside the window that we have here. There's a lot of opportunity here in Austin. And I think across the country, yeah, you are seeing that. I was actually, I Airbnb'd. I felt like Don Draper. I haven't told my wife about this, but we're going public now. Not that side.
Are you saying you're a war hero who stole somebody's identity?
Well, I'll just say I'm a dirty New Yorker, so we'll put it there. But I would say, fun fact, well, I believe my mom probably dated the real Don Draper back in the 60s. So get her a few drinks at Franklin's and she'll tell you some great stories with that. But, somehow in that spirit. So as I was in Costa Mesa, very blessed to be out there a few days ago in California. And my host, we had a great chance to speak. And that's what she said. She was probably, latter 50s. No kids, no parents directly to take responsibility for. And she bought a few places. Now she did this a few years ago, so she had the benefit of the wave coming up, but her mindset, I think at the time was really, what do I want to do with my time going forward? What sort of contributions? And, also do I have either the trust or am I going to build up my little management team? Can I self do this? Meaning, do you own the place across the street? Or do you know call it the one property manager for the square mile that does all of these houses? And I think she chose something towards the latter, but ultimately, she had her primary place that she Airbnb. She has two others, I believe, that are a mix of Airbnb and then longer term rental. Yeah, so it was a lifestyle choice. So I think a lot of folks are seeing this. Plus also, as I'm sure on your previous episodes talked about I saw Jennifer G and others with asset protection, depreciation, all of that. So there's other, I think, huge benefits as folks are either inheriting, have other lines of income coming in maybe at the tail end of their career. But ultimately, I think it's just a factor of time. It's just what level, what's the number, as they say, but it's not this end number of 2.4 million. It's what's the ongoing income that you can be comfortable. Especially in a state like Texas or the Southwest or Southeast, especially as empty nesters, it could definitely be 100,000. Coming in that you can live a very comfortable life. So, yeah, I think we're seeing more and more folks that are doing that, and going full circle with IRA when MRDs that are now minimum required distributions now when you're 72, but folks are realizing, okay, great, I have a few properties, that one rent check, basically I'll live off that and I'll be taking it out, and there's no early withdrawals, etc. And especially if it's in a Roth account, you're not paying taxes on it. So it's you're right, you're seeing more and more of this, I think, and I think you're going to see more, especially as I think it's going to be a great business opportunity for the service providers on the management side, as this probably more millennials in our generation are inheriting these properties that don't really want to physically touch them. I think there's going to be, I don't know what it's going to be, but I think there's going to be some pretty cool things coming down the road.
Mm-hmm. And we just had a interesting interview with our buddy Brett Swartz from Capital Gains Tax Solutions talking about the deferred sales trust. Yeah, and that was eye-opening about how to use that to leverage, and especially like you just said, you got people that are retiring and leaving assets or wanting to get out of their property, their families may not want to operate and take that over. So yeah, it's good stuff. They're definitely out there. Dan, what's the best way for people to reach it? Now you work with investors from all across the country. They just don't have to be in this glorious Lone Star State, correct?
Correct. Yeah. So we're open to anybody with basically a U.S. tax account right now. We Rocket Dollar can work with. I would from the real estate side, like you, I'm fortunate to know many folks. Even as just a friendly introduction, somebody wants to learn more about multifamily or storage, I can, provide introductions just so then you can do your diligence from there. So we'll do it easy in terms of how to get in touch with me. Dan at rocketdollar.com, DAN at rocketdollar.com. My last name's a little complicated, but these are for my Philly fans, a whopping 100 US. If you can spell my name, you get it. D Kryzanowski. Hopefully we put this in the show notes, but D Kryzanowski. if it makes sense for you to sign up for a Rocket Dollar account, that'll get you $100 off. And then, as I said, for folks that are raising money, even if it's kind of your first go, it doesn't cost you anything. I call it the copy paste marketing. It literally is that you get to, by default, you get more money from less people faster. So, folks on the other side of the coin raising money, more than happy to have a conversation.
That's awesome, Dan. That's awesome. I appreciate it. You guys are doing a great job. You've got the podcast as well. You want to talk about the podcast as well?
Yeah, this is cool. So called Rocket Your Dollar. It was fun when we were thinking of names, but this seemed the most PC to bring out there. And it's coincidentally, we hosted at Capital Factory. Your space looks great here. I love the sunlight in the background. It's got Capital Factory. I call it in the bunker because it is on the military floor. And when you talk about this puppy soundproof, like it's pretty wild. So, don't drink too much coffee or cold brew before, coming on. But it's fantastic. And we've had, I think you mentioned Brett, and I know we didn't even talk about this before. I think Brett's been on as a guest, some other folks, and it really has been for the dynamic sort of education, for this kind of holistic view that, if somebody even cherry picked, what 5 episodes do I need to listen to? On my ride home over the next month, we're trying to do similar. So that's cool. Yeah, there's a variety. It's been up. I think it's, probably do a weekly episode from here. We'll, of course, meet a lot of cool folks during South by Southwest. I've been doing kind of these 1-minute clips a minute with Dan. Last year, probably did about 50 of them too. So, I'm sure we can, I call them the Bigger Pockets community, Jake and Gino, Michael Blanc, Madam Liz Fairless, all the guys and gals. And then even somebody like Jeremy Roll. So we talk about the investors, if you are sitting on let's just say $1 million, and I know that may be far out for folks, but for those that are sitting on or inheriting it, I think now it's a time to take a moment and think, if I passively invested this wisely and was in a relatively lower cost area, can I live off this? And, frankly, it might be yes. So that's another thing, Jeremy Roll, I would say, kind of in the spirit of, these are the types of folks that either have been on or will be on, very similar to your great kind of resume of guest over the years.
Awesome. Yeah, it's great. It's a great podcast. I've been binging to it. Check it out. Rocket Your Dollar podcast. Great stuff on there. And then you got some big plans for South by Southwest because it's going to be here in like 2 weeks.
It's coming. It's wild. And it's funny too. It's my wife's birthday, my son's birthday on St. Patrick's Day. So it's always eventful, one way or the other. And then in between, of course, it's everything. I said Capital Factory's booming. FinTech luminaries for our FinTech friends out there tends to be the best show. And I think you'll see a little more CRE tech, although I think the major CRE, commercial real estate tech, is probably coming, I think, late April, I believe, downtown Austin. But it's, there's always something going on here. It's all good.
Well, that's good stuff. We got to get together for some barbecue or a beer at least.
Done.
Before too long, right, man?
Good stuff, brother. Awesome.
Good stuff, man. Well, hey, man, thanks so much for coming out and being on the Note Closer Show podcast. Thanks for delivering your knowledge as always. And once again, guys, he said, go out, rocketdollar.com. Go check it out. Dan at rocketdollar.com. If you can spell his name, he'll throw in $100 into your account when you open it up there. Like he said, reduced fees, and they've got some great opportunities out there for you to take a look if you're looking to put your dollar to work on some things. So go check it out. But more importantly, guys, take action. Like he said, you can put up to $6,000 away right now into your own self-directed IRA, whether it's Roth or traditional. And there's a lot of opportunities. You're self-employed into putting their solo 401k or a variety of things out there as well. So go out, take some action, everybody, and we'll see you all at the top, everybody. Bye.
Good stuff. Thanks.